Welcome to S&P Capital IQ's monthly loan market update. I'm Steve Miller, a member of the Leverage Commentary and Data team. Over the next few minutes, we'll review recent market trends. In preview, the loan market rallied further in April as demand again outran supply. Positive investor sentiment combined with an excess of demand over supply pushed the average price of S&P LSTA index loans up a quarter point to a fresh post-credit crunch high of 98.4 cents on the dollar in April. In response, the index gained 60 basis points during the month, bringing loan returns for the first 4 months of the year to 2.7%. Visible inflows were mixed in April. On the one hand, CLO volume retreated to a 9-month low of $3.9 billion after touching a 6-year high of $10.7 billion in March. On the other hand, inflows into loan mutual funds remained robust at an estimated $6.5 billion based on data from Lipper FMI. While down from March, inflows handily exceeded supply. In all, the amount of S&P LSTA index loans outstanding increased $2.6 billion in April. That suggests a demand surplus of around $8 billion. Given these technical trends, it's not for nothing that new issue clearing yields tightened further in April. Double B loans printed in a 3% context and single Bs in a 4.5% to 5% band. With paper printing at the lowest yields in recent memory, issuers uncorked $37 billion of institutional loan repricings in April, pushing the total for the first 4 months of the year to $156 billion, or 28% of the S&P LSTA index. If you're keeping score at home, the average spread reduction on the loans in question was roughly 150 basis points. Turning to credit conditions, the loan default rate eased in April to 1.9% after reaching a 28-month high of 2.2% in March. Managers are sanguine about the near-term outlook. On average, they expect the rate to inch to 1.8% or so by December, according to LCD's latest buy-side poll taken in mid-March. Looking ahead, participants expect the loan market's positive bias to persist. Arrangers say front-end LBO activity is still lackluster, suggesting that supply will continue to lag in the months ahead, though there are some green shoots for the third quarter. Loan demand, meanwhile, showed no signs of waning. Retail and institutional investors continue to embrace the asset class. CLO issuance, however, has downshifted, if only because collateral is scarce and therefore equity arbitrage is thinned. That brings us to the end of our overview. For more information on the loan market, you can check in with us on the web or via LinkedIn, Twitter, or Facebook. The links for each is in the description below. You can also download this presentation at slideshare.net.